Hey, and welcome back to Financial Reactions $10,000 portfolio. This week we're going to see how we've done, and this is the aggregate portfolio, so this has everything in it. And as you can see, overall we started about here and we are down to here. And of course this is pretty much the same as the market. The market has really not done well lately, and neither has this portfolio. There are a few individual winners. We have ARMW is the leader. It is up 2,800, and as you can see why, it has actually gone up from an average cost of $25.66 to $32.65. Let's go ahead and take a peek at what kind of dividends it paid. It's going to be a $15.57 for annual, and it paid 30 cents. And that is, it jumps around, but 30 cents seems to be a good return. We had 16, 33, 33. So we'll take 30. 30 sounds good for that one. Seems to be about in range, and that's a 60% yield on cost, so that's pretty good. Because if you look here, your annual dividend forward looking at 30 cents would be that $15.57 on a $32 stock. So that's pretty good. Let's go back to the portfolio. Dividend aristocrats. Have we had any payers yet? We have one. Stanley paid. They paid an 83 cents, and that just happened. So these are starting to pay. Like, these are dividend aristocrats. They pay generally quarterly. So pretty much everything we're going to see in the portfolio is just price. And as you can see, CAT and J&G are doing good, and everybody else is a little down. Okay, let's go back up and check out. See, index funds, these will be, some of these are monthly payers, so let's see. Yeah, we've got a few that have paid, and they're all in the red. These index funds are tied more to the S&P, the Russell, the Dow. So these, if you know what's going on in the news, you know why stock market's taking a hit, especially with the fuel prices going way up. Here's our weeklies. Start with Rex shares. We only had one good one, CWII. Let's go ahead and take a peek at its dividend. It paid 8 cents. So it pays a low dividend, but it has good, it's maintaining its price. This one's only down a little. MSII, it paid 4 cents. 27. So, but it's lost share value. So let's see if 27 is in line with the past, or if that was an outlier. Actually, 27 seems to be in line. It had a high of 42, but it had a lot of 20s and 30s. So this one is just a NAV erosion problem. Roundhill, how is the Roundhill doing? Obviously red. There it goes. Descending, just the one. ARMW paid a 30-cent dividend. Didn't look. Its price, that's the, oh yeah, that's the one we saw on the first screen. It's had a nice price increase, so we're happy with that. Really wish some of these weekly payers could figure out the NAV problem. I don't know if they should pay less dividends and pay just slightly less and buy back more of their stock to keep the price up, or I don't know how they could do that, but it would be nice, because it seems like mostly these high-paying dividend funds, their Achilles heel is always that NAV erosion problem. And in the year I've been following these, when they were monthlies, when I did the Yeildmax, NAV erosion was the huge issue. As you can see, these are all down also. This is group 1, and Yeildmax used to be the ABCD. That would be this group here. Group 2 used to be all those monthlies that went to weeklies. And let's see. You see this is a big portfolio because there's a lot of different funds in it. It's down quite a bit, even though there is some green. But as you can see, there's a lot more red. And if you, on a quick glance, you can see the ones that are up, like this one. Remember, we started with 10,000 shares, so most of the, or $10,000. So if this value is over 10,000, it's going up. If it's under 10,000, it's going down. If it's close, it's close. So that's how you can look on this tab for a quick overview of dollar value. And as you can see, this one, it's only up a little bit in price. And it's paid a 21 on the dividend. Let's go down and see how that rates over time. So that's actually about in the ballpark. You can see these are not consistent because they fluctuate because of the high volatility. So sometimes they make money, sometimes they lose. So 21 cents, we'll call that a good dividend. This one, 36 cents, so that's not a bad dividend. This one, so that's right at 12 cents, 31 cent yield on cost, current yield. So 6.11 for the year. But as you can see, the overall portfolio is down. And Defiance down, as you can see, a lot of red. Only one good one, New Soy. It had a 9-cent dividend, so that doesn't pay a lot of dividends. So you have the cost. It's gone up a little from 7. This is our average cost, and this is the current price. So with dollar cost averaging, we're ahead of the game. Yeah, let's see. Gold should be doing better than that. I don't know what their problem is, but see, that one pays 9 cents. That one pays 12, 17, 28. So these weeklies are not going to have really high dollar value. So you're looking at the cost to share. This one's trending down. Let's go down here, and nobody is in the green. That's unfortunate. This one is kind of like the Yeildmax, where a lot of these are single shares. So you can see this one's AMD, paid 24 cents. It is a higher yield, so that's good to look at. But let's see what it's looking like for consistency. It looks like it's continually dropping its dividend, so you don't want to see that. Monthly ETFs, these are some of these have paid, a couple have already paid. We're only like 3 weeks in, so they all should. You wouldn't see it all. We have a winner. Who is this? Janice, Detroit Street. It's 5%, which is in line with more of these. As you can see, 20. These are more consistent, around 20 cents. That's just the nature of them. And the last tab is monthly dividend stock. And these are all down as the market is down. So that's a lot of it. What'll be nice is when everything settles down, hopefully here shortly. Gas prices, maybe if they'll go back down to where they were, kind of the markets will rebound a little bit. Then we'll see how these things do during the rebound. So that's my weekend recap of the dividend tracker. I appreciate you being here. If you could do me a favor, hit the like button and subscribe if you would like. I'd really appreciate it. And enjoy your week.